The day after Tesla lost $126 billion in market value, we're learning new details today about the Tesla CEO Elon Musk's deal to buy and take Twitter private. Alexis Keenan here. She took a look at the fine print and joins us now. Alexis, good to see you. One of the interesting takeaways, at least that I saw, is that Elon has to be nice now, contractually obligated to be nice, or maybe don't be mean.
Right, and we'll get there. But let's kind of roll through what is in this merger agreement. We're learning a lot of details about what the terms are. We don't know all of them, but here's what we do know based on this filing. And it is between Musk, as well as ex-holding companies that he's created for this merger, and Twitter. So there's a host of conditions that really trigger $1 billion penalties for both parties. On one hand, let's first take a look at what Twitter agreed to. For their part, they said they'll stop soliciting and negotiating other bids. Now, unsolicited bids are okay under these terms, and if Musk is outbid, he has 4 days to make a counteroffer, and he's entitled to $1 billion if Twitter decides to take or recommend to its shareholders an alternate offer. Also, $1 billion would go to Musk if Twitter announces or leaves on the table a competing proposal for acquisition of more than 50% of Twitter's stock. Also, $1 billion going to Musk if Twitter's shareholders fail to vote for the merger that Musk is proposing. Now, let's take a look on the other hand at what Musk has agreed to here. He agrees that he'll pay Twitter $1 billion if his financing fails. On the other hand, if Musk backs out of the deal or breaches some of the terms of what's in this agreement, he also would owe the company $1 billion. So lots of $1 billions flying around there. Also, Musk particularly agreed to mind his tweets. And I'm going to quote directly from these documents here. It says, Musk shall be permitted to issue tweets about the merger or the transactions contemplated, so long as such tweets do not disparage Twitter or any of its representatives. Now, both parties agreed to additional terms here. They can both back out of the deal generally if it's not closed by October 24th. There's also a 6-month extension in there if there is some delays from regulators or legal concerns. They'll have some wiggle room there that would bring us into April. Also, a handful of reasons that the companies say would be insufficient to kill this deal, namely COVID-19 pandemic reasons that can't be foreseen, something like a cyber attack, also regulatory changes that could happen between now and the deal's closing, also public backlash. If Musk is disparaged publicly, Twitter is for this agreement that they've made, they say, nope, that's not a reason that this deal must not go forward. Guys?
Alexis, thank you. Good stuff. Rochelle, go ahead.
I think that's absolutely fascinating. All these different loopholes and people just sort of tossing these billions around. I think it's very interesting. Obviously, a lot of people wondering what Musk is going to do next. I do think it's interesting. He was very clear about wanting to authenticate human beings on the platform. We're wondering sort of as to what end. Will it be about perhaps authenticating them for the purpose of using like a payment service on there? I'd be very curious to see where he goes from here.
You know, the interesting thing about authenticating the human beings on the platform would also be to authenticate human beings on the platform or non-bots on the platform so that you could then attach it to some type of bank account, some type of service, so that you've got people who are going to Twitter in the future who are able to conduct either payments directly to another business or publisher on there, peer-to-peer payments, which Elon Musk has a history of with PayPal and his time there. And so with all of this considered, looking at the different users and trying to authenticate as many humans as possible on the platform so that you can then validate and connect to a different financial service that they may tap into, that's the big play that is perhaps a low-hanging fruit for him to come in there and add on to the service, because
there's the revenue model.
Right, there's the revenue model, because at the end of the day, the financial backers, as we've discussed before, are not looking for somebody to move fast and break things. They're looking for somebody to leverage what's there and add on to it and immediately start to monetize the hundreds of millions of users activated, active, and monetizable already on the platform.
That would be interesting only if it fits what Elon has said he wants to do with the platform. Because remember, the first thing he said is, this is not about making money for me. It's not a financial play for me during that TED Talk. So it would be interesting only if that fits his other goals. The real takeaway for me in the last couple of days has been the outrage, in particular on one side of the political aisle, about fears of what Elon's purchase of the platform will do for conversation, will do for the negative nature of it, for the threats and the violence. I think it is a little bit overblown at this point, but an interesting takeaway when you dive inside the numbers. Since Elon acquired Twitter, we have seen massive gains in followers, in particular on one side of the aisle for conservatives. Marjorie Taylor Greene, whether or not she's a conservative, she is certainly far right. She has gained 175,000 followers since the acquisition. Someone like Barack Obama, who is the left, has lost more than 300,000 followers. So it certainly appears, Twitter says that is organic at this point, it appears that the far right loves the Twitter bot it, and the far left is not happy about it. That is a surprising takeaway in these early days.
You know, particularly as we continue to track where this goes forward from here, the timetables that we're going to be watching going into the fall as well, even for the settlement in entirety of this entire deal, of course.